going on, everyone? D. Anthony here with Evolution Traders. In this video, we're going to finally talk about breaking out of this distribution pattern. Now, if you guys have been following my videos and you maybe have noticed that it's been a little bit harder to trade as of late, right? The ranges were small, they were tight, right? You're getting setups that are confirming, but they're really not pushing up higher. Guys, I spoke about this for days and days and days on end. If you just look at this daily chart, again, this daily chart's got a lot going on, but I want to show you guys something here. The videos that I was making kind of talking about this distribution that we were in, if you realistically go back to the 6th when we got that close over the 50-day moving average, right? Now remember, from a technical analysis sort of standpoint, over the 50-day moving average is typically bullish. Underneath the 50-day moving average is typically bearish, right? You can see once we lost the 50-day moving average going back to 415, we went on a 7-day sell cycle, okay? All the way to the bottom of the range where we found support at the linear regression channel 50 on the daily time frame. Now, once we reclaimed this 50-day moving average, we didn't really start off just going up and up and up and up and up. In fact, the range started to contract. You'll notice prior to going into distribution, we were trading in a range from high to low, okay? The NASDAQ was trading 333 points in a day, 360 points, 450 points, 500 points, 380 points, all the way down to 115, 169, 136, 107. Guys, that's nothing when you talk about the NASDAQ. From high to low, 106 points on the range is nothing. So if you're getting setups based on whatever strategy that you're using, and you've only got a total range of 100 points, think about how much that potential is, how much potential there actually is to, continue, right? So there was a lot of traders that maybe over the past week have found difficulties trading, right? And one thing that I was stressing on is anytime you go into a level of distribution, you never know if it's going to, kind of break out to the high side or to the low side. However, depending on if you're trading in distribution towards the bottom of a range, maybe you're leaning a little bit more towards a breakdown. If you're trading towards the top of a range, then maybe you're leaning for a breakout. Now, you can see that this distribution was not trading down here at the bottom of the range, okay? We were trading in the middle upper half of the range. So, you kind of were leaning a little bit more towards the bulls, but aware that the bears are there, and if they do break this down, we're not opposed to taking the short. So with that being said, today we got this monster breakout 314 point range on the day, and today was actually one of the first trending days in a long time. And when I mean trending days, I mean literally there was hours that were passing today where the NASDAQ was not even taking a downtick. Normally during lunch hour, the price action tends to reverse or go sideways. All lunch today, it just kind of trickled higher and trickled higher and trickled higher and trickled higher. The people who maybe found trouble today were people that did not believe or want to agree with the trend and constantly were not believing that it could go higher and trying to short tops. And then when it would put in a new high, trying to short tops. Guys, the market will clearly tell you, right? There's indicators that you can use, there's supply and demand levels that you can use, there's levels that you can use to kind of tell you to stay on the right side of the trade. Now, one big level that I use on an intraday time frame, on the 5, on the 1 hour, is going to be that 20 SMA, okay? If we're trading over that 20 SMA, over the 10, over the 5, this is a trend to the upside. If we're trading below it, it's a trend to the downside. So if you were to get in at any point in time today, more than likely you probably made some money, okay? Now, if that trend was to break through, let's say, a 5-minute 20 SMA, then maybe we wouldn't want to be going long. Maybe we're looking for that pullback into rising support on a different time frame. With that being said, we've taken out the most recent, prior to this one, distribution that was going on in the middle end of March. Okay, so we've taken out these March highs here, and the NASDAQ is starting to ramp up. So bull market back, yes. Now, does that mean that every single day is going to be green? Does that mean that tomorrow we don't give back 200 points? Of course not, right? Anything can happen. But in a situation like this, where we went through a level of, 1, 2, 3, 4, 5, 6, almost 7 days here of distribution, if we do get a pullback, that pullback is where you're going to want to find those buying opportunities closer to 18,471 and 18,324. Those could be potential pullbacks for a break and retest. And if this holds, then you're looking for that continuation. Now, we can also continue to go on and maybe, finish the week on another 1 or 2 days upwards movement, right? Where we continue to put in highs. Ultimately, this cycle that we've just started, I would look to see this cycle get into the 19,000 mark, okay? Between 19,000 and 19,300, that would be this upper linear regression channel before I see any type of real significant pullback. Now, again, anything can change tomorrow, but what we are looking at is confirmation through pre-market highs and confirmation through the first hour high of day. That's what we would be looking for. Any pullback off the open, see if it catches support, and then looking for those 5-minute 20 SMA plays to the long side. Overall, the Room and Evolution traders today absolutely killed it. I know a lot of you guys out there on YouTube killed it today as well. Again, everyone loves a bull market. Everyone loves when stocks are going higher. The sun seems to shine brighter, and smiles seem to run across everyone's face, right? So with that being said, make sure you're open to both sides of the trade, guys. It's not an end all be all, but right now, as it stands, bulls look like they're in charge, and any pullback should be treated as such. Just a pullback doesn't mean we're going lower. Again, bulls don't really have any sort of trouble until they were to give up the daily 20 and 50-day moving average again. If we were to get rejected and lose a 50-day moving average again, then maybe we can talk about coming back down to the bottom of the range towards 17,515. I hope this video gives you guys a little bit of context. I hope you guys were on the right side of the trade today, not trying to constantly short these new highs. Again, I know it can be very, very difficult. How do you identify if it's a trending day? Guys, pull up a 5-minute time frame, or any time frame. It doesn't really matter. An intraday time frame, sub 1 hour, okay? Put a 5 SMA on your chart, put a 10, and put a 20. Are we trading above those moving averages? If we are, the market is trending. If you're trending above the 5 and it's not even testing the 10 or the 20, that's a power trend, okay? If we're riding between the 5 and the 10, that trend is very, very solid. And if we are over the 20, that's the start of that trend, okay? So the start of the trend will be at the 20. Firm support will be at the 20. Anything below the 20 goes to the 50 and then 200. Again, multiple different factors that you can use. You don't have to use moving averages. You can draw on your own supply and demand levels. You can draw on your own key levels based on prior price action. If you kind of just look at the chart and let your eyes kind of do the math for you, you can see a rejection spot here, 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 here. So if we do break out of it, now we're on a breakout, right? So someone could have a supply zone here and looking for that confirmation over. You can have a firm level of support here, 1, 2, 3, 4, 5, 6 multiple touch points. This would be your range. Anything below that range, which is going to put you below the 50 SMA and the 20 SMA, you could talk about going to the downside. So anything above that, we're looking for longs. Anything below that, we're looking for shorts. Again, even if you're scalping and even if you're day trading, you want to be on the right side of the trend. Right now, the trend is higher. The trend put in a bottom on 419. So we're almost about 30 days later of this bounce on this current uptrend, okay? So more green days than red. We've only had literally since we bottomed out here 2, 3 red days, guys. And this red day was in distribution, not a small red day. So ultimately over the past 3 to 4 weeks, guys, you should be looking for longs. Yes, look for longs. You're in an uptrend. You've had 3 red days in the past almost 30 days. Why are we constantly trying to short if we're in an uptrend? Hope to see all of you guys inside the room. The rest of you guys, I'll see you guys in on YouTube on the next video.